I want to bring in now Nicholas Wealth Management President David Nicholas. And David, you actually say that it's good news that everyone seems to be bearish right now. Explain that.
Yeah, Charles, I'll tell you, this is the most anticipated recession in human history. I mean, despite of all the bad news, we've had the banking crisis, we've had these perma bears. This market is very resilient. We could see a small pullback in the next month or so, but what we keep seeing is a buy the dip mentality. Phil was just talking about all the cash that's on the sidelines. So until that goes away, we're bullish on this market. The other thing, Charles, is there's this assumption that a recession is going to be really bad for stocks. I think we have more of a mild pullback. Stocks are trading a year out. I think we could see a stock market that is resilient through a slowdown at the later part of this year. So I think this thesis that the world is ending really, I think, could disappoint a lot of bears because this market wants to head higher. So that's why we're continuing to stay bullish, Charles.
So let's talk about a name that you like. Tesla, one of these names that's sort of been the horseman of this rally. It's been under a little bit of pressure here lately since that earnings report. You've been buying it back. You've been buying more on this dip.
Yeah, that's right. Charles, we talked about this. We got out of Tesla for tax loss harvesting. I told you we'd get back in it, but we bought it back recently. Why? It's down from its highs. We think if you're buying Tesla just for a car company, don't get in it. We're buying because we think there's an AI future here for the stock, Charles. So that's what I think investors should look at, and that's why we're buying more.
I want to get you help me handicap some of these earnings reports after the bell. Let's start with Meta. So here's the interesting thing. Since they changed their name to Meta, they've reported 3 times. Every time they failed, Facebook may still be available. I'm just saying. Last time, though, the stock popped the same day they reported. It was up 20% a week later. But here's the thing I'm wondering with this, though, David. We saw the maturation of Mark Zuckerberg, the guy who went out there and started firing people. It feels like this rally is as much about cutting the fat as anything else. Would you be a buyer or a holder of this stock into these earnings?
Yeah, we own the stock. We are holding it into the earnings. You're right. Take the metaverse out of the equation. This is a story about profitability that's directly affecting the bottom line. So what Wall Street wants to see is these jobs cuts. Are these cost measures, are they truly affecting bottom line? I don't think advertising slowdown is going to be as bad as Wall Street expects. I would hold into earnings, and I think you want to be a buyer on any weakness.
What about ServiceNow? This is a hot new sector. By the way, look at this board. It's just almost all green. Like it's a week later. Every time the stock is up a week later, it feels to me, even if you don't know what the hell it is, you may want to own it. But what do you think from a professional opinion?
Yeah, Charles, if you look at its track record, it has a great track record of beating earnings, beating estimates. Look, it's got great free cash flow, great margins. I like the stock. We're bullish on it. We do not own the stock. But what are they in the business of? They're in the business of making companies more profitable. If you think we're going into a slowdown or a recessionary pullback, this is a company you want to own because they're helping big names maintain profitability, maintain margins. So we like the company here, Charles.
Hey, I got 30 seconds. KLAC, one of the big semiconductor names. President Biden's touting these semis. But last time they reported, it wasn't a great look. Are you in this? Do you like him? The semis have been under pressure lately.
Yeah, they've been under pressure. Look, what I like about we don't own it, but what I like about it, despite the slowdown in revenue, it's still got great gross margins. Here's my concern, though, for it. 50% of income comes from China and Taiwan. If we have any geopolitical concerns there, that could impact the stock. But I think it's 19 times forward. Hey, for a chip name, that's actually pretty good. So we probably nibble at it, but we don't own it right now.
David, it's been too long. Thanks a lot, my man. I appreciate it.
Thanks, Charles.